There are two symbols that are forming a pattern. One's a little further along than the other that a lot of traders are very much interested in. And one is SMCI, the other one is LRCX. Now, this is less about SMCI and LRCX and more about a pattern that's forming in these two. Now, this week is going to be a little interesting because even before we get to these two setups, we do have to talk about the overall landscape of the hot zones this week. And we have not one, but two Powell events scheduled. So, of course, tomorrow we have the Fed funds rate, the FOMC statement, and the presser. So this is all between 2 and 2:30 Eastern. And then we move on to scroll, Friday. And once again, we have Powell. So for those of you wondering, what the heck does Powell have to say on Friday? He's going to be delivering the opening remarks at a Fed Listens event. Wow, that's very emo. But there you go. So that's what's on tap for Powell. And anytime he's at the mic, gang, we know this could be a thing. If he's going to say anything, there are no questions expected when he's delivering opening remarks, but he knows how, whatever his press conference on Wednesday in the statement, however that landed, if he needs to course correct, he can do so Friday morning. So Friday morning is going to have a lot to do with ultimately how well he thinks he delivered the nuance of the monetary policy. Please remember, there is no expectation for any kind of cut for the March 20 meeting, for the May 1 meeting, and it's really the June 12 or the July 31 meetings that are up for grabs, so to speak. So having said that, let's go back to the pattern that's occurring right now in LRCX and SMCI, two very popular symbols, and how once you understand the pattern, you can apply this to any stock. Now, I'm going to be focusing mostly on the daily time frame, so these are going to be swing conversations. And let's talk about the top three things here. The best momentum or Momo breakouts are when there is or was a trend. LRCX is a perfect example of a trend that's been in place for quite a bit of time. This is well over a month of energy. Let's call trends what they are. That's energy, right? This is energy. All right. Now, when that energy subsides, that doesn't mean we're going to reverse, although too many traders tend to operate that way. There's more expectation of continuation of that energy, or Physics 101, a body in motion. You know how it goes. So let's keep that in mind. All this is within the probability of expectation. Moving higher, right? Continuation. Now, having said that, it's really important to understand the structure has shifted, and therefore we can use some different tools. Structure dictates strategy. Strategy dictates our secret squiggles, aka indicators. Right now, LRCX is oversold and neutral. That's the matchup. We don't look for overbought, oversold in trending markets. That's actually incorrect because trending markets are inherently imbalances. So we have this support zone. We also have these neutral yellow candles. These could also be blue. They're yellow on my chart, but that's a neutral candle. So anytime you see a blue candle on my chart or yellow, that's a neutral candle. But this neutral candle is occurring in the context of an overall uptrend. So what we have here is a trend that was respect for continuation. We either can find a narrow Darvis or just neutral candles, and you'll see I have the latter, the narrow Darvis sometimes accompanies this, sometimes it doesn't. If it does, great. Momo breakouts are part of trend trading, ideally part of trend trading, because again, the continuation probability is there. So the idea is to find the range and buy as close to the bottom of the range as possible, or this is actually a bit of a mean reversion where we pull back into the 34 EMA wave. I use 34 candles or bars or whatever you want to call it as my mean. I have for over 30 years. Again, if we're talking about probabilities, this is highly probable. So now you have the structure, now you have the setup and where it's best. The idea is to buy calls as it sinks into this range, preferably on bearish momentum near the bottom of this tiny little range that these yellow candles have provided. So if you want to do it this way, grab the highlight tool, say on whatever platform you're on, just highlight the zone, like so, and buy preferably in the lower half of that tiny little zone. And you can see that a little bit better here on the 1 hour chart. Let's go to SMCI. So now that we know sort of what it should look like as it consolidates, let's look at a similar setup, but earlier in that process. This reminds me of when you watch a morning show and they baked a pie, but they're not going to sit there and bake the pie for 30 minutes on the show while you wait. They already have one waiting under the counter. All right, so I showed you the one waiting under the counter. Here's one that's baking. Okay, this is SMCI. Big old gap down right into the 34, right? This is 34 bars, 34 daily candles. That's our mean reversion. Again, I've tested this for many decades. It just works, especially within the context of a trend. So unlike LRCX, SMCI is still very much in a trend, and that makes a lot of sense to start setting up. Okay, how does the setup work? Well, anything inside this area works, right? Anything inside this area is going to be great. That's the mean reversion zone. And what I'd like to see is after this big gap down, I'd like to see, and we're already seeing a little bit of evidence of it, but not enough. I'd like to see a second candle, a second daily candle, where SMCI has got its feet back underneath it. It's almost as if SMCI took a standing 8 count. We just want to make sure it's stable. So that could be a second or third candle. Now, unfortunately, while all this is happening, we've got Jerome Powell, which is going to bring chaos all of its own, volatility all of its own. That has nothing to do with SMCI's gap down. That's just the reality of this week. But if you understand the pattern, you know, now we want to see another candle, maybe 3 candles consolidate that are yellow in this area. The other thing that could happen tomorrow is a price pattern that I love called a minor low. So I'd want to look at a minor low. And in the premium video, we'll get a little bit more into this pattern, but suffice to say, I'm looking at a reaction through today's high. All right, we'll talk more about that, this minor low. So that's another way to look at this mean reversion within the context of this bullish energy. Remember, trends are energy. And when the energy subsides a little bit, we respect the energy, the trend that was, and we look for the continuation. And that's exactly what SMCI did back in here. We want it to do the same thing after a pullback. Now, granted, this is a very accelerated, if not downright parabolic stock, but this is what buying the dip looks and feels like. All right? So study these patterns, understand them. They repeat all the time. And if you follow these steps of focusing on them as really an extension of trend trading, with the consolidation, your momentum breakouts are going to be way better. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.